My guest today is Sara Rywe, general partner at byFounders. Sara started as an entrepreneur at just 17 when she founded her own dance school in Sweden. She later worked at McKinsey and Danske Bank before joining byFounders about 7 years ago. Since then, she has led investments in companies like Lovable, Normative, and Courtly, and has helped shape how the next generation of Nordic founders build and scale. Sara, great to have you here.
Great to be here. Thank you.
I am very curious about this one, Sara. I asked you, I think I reached out to you last year and then we didn't make it happen. And then I thought, now I'm going to give it a go again, which is perfect timing because I am really curious to hear about how you see 2026 panning out. And we are now in the end of February for this recording. So I asked you if you have 3 bold predictions. I don't know if they have to be bold. They can just be predictions, actually, for the Nordic startup and VC landscape in 2026. What would they be?
Yeah. I mean, it's difficult to be bold in an industry where everything feels extremely bold, I guess. But I think one thing we're not talking enough about is, I believe 26 is going to be a year where angels will take over a lot of kind of early stage rounds in general. So what I mean with that is, for so many years now, we haven't had any liquidity for like early employees in companies. So we've seen kind of the same angels from like early at Spotify, etc., early at Pleo. But now, if you just look at the last few months with like the huge secondary transactions that happen in Revolut, in 11 Labs, and also actual acquisitions like the Sana Labs acquisition by Workday, this means hundreds of millions of dollars in the hands of individuals, operators who previously had, many of them, no savings beyond what their salary had given them. And these people will now go out in 26 and want to deploy a lot of this into early stage startups. So I think that's the first prediction that, I mean, I'm already starting to see it right now. Going back a few years at pre-seed and seed, we many times co-invested with other venture funds. That barely happens anymore. Like now we just invest with angels, and there's so many extraordinary angels who can actually do real work and support for companies that now wants to fill up rounds. So I think that's going to be the first thing that we're seeing.
Am I allowed to ask before we go on to the second?
Shoot.
This is super interesting. And so I'm an angel myself. It's fairly, unfortunately, I have not been one of those who made all the millions, but I have, I write some small tickets and I come from the VC space and I enjoy being in it, even though the tickets are fairly small.
Yeah.
So it's great to hear. And it's also been what I have been seeing, that so many more angels are sort of in the market now. And I think I was speaking to a company that's raising now. And I start to give the advice that for the early rounds, it's interesting to talk to the venture funds, maybe have one. But I would really, in the very early rounds, really consider the angels.
Yes.
And my experience from the companies I have invested in is just those angels often have perhaps even more skin in the game. Not to say that the venture funds don't, but and they have the operator experience. I know certain funds have this as well, but it's I think it can be super valuable. So it's very, very interesting to hear. And so, Sara, we spoke about this and maybe before I clicked record, but you're Swedish, but you lived in Copenhagen, and now you live in Stockholm again. So you've seen both the Danish and the Swedish market up close, and byFounders work across the Nordics, of course. But how do you see the difference in the angel market, so to say, the angel landscape in the different countries? Because I mean, yes, in Sweden and Stockholm in particular, I assume there are a lot of angels who have made a lot of money. Maybe you're also starting to see more in some of the other countries. How do you see that difference?
To be frank, it's just like a world of a difference in kind of sophistication level of angels. There's probably a couple of dozen angels in Stockholm who all of them have like the finger on the pulse, know exactly what's happening, know exactly which founders who are out building and raising. And it's almost like a full-time job being an angel for many of them. And in Denmark, we have like one of those type of angels. Then there's tons of good angels still, but I think a lot of Danish angels still use maybe less than 5% of their time as a little side gig to put in a couple of tickets, which is super important for the ecosystem. But it also means that they don't have the finger on the pulse to the same extent as many of those Swedish angels has.
That's interesting. How do you said a couple of years back you would work more, invest even more in the early rounds with other venture funds.
Yeah.
And again, when I was in venture, we spent a lot of time with all the other venture funds. We were quite early. So do you then spend a lot of time with the angels now?
Yes.
Yeah.
I do not have a single recurring investor chat in my calendar, and I haven't had it for the last 2 years.
Oh, wow. But how do you engage then with the angels? Is that, how do you do that?
A lot of it is just like informally over WhatsApp, meeting up in occasions. I think I think my favorite way of really getting to know an angel is to see how they work up front with a common portfolio company. And that's really how you can both vouch for that individual going forward and help that individual be introduced to the new founders that you look at and invest in. But also just to really understand and get to know them on a personal level. For example, now lately, when we have closing dinners, we've ensured that angel investors are invited to those closing dinners. Just like tiny things like that really makes a difference in building those relationships. And after that, it's super easy to just use WhatsApp and ensure to continue to invest together.
Makes sense. We made it to one prediction, but it was a very interesting prediction, so that's why I double clicked on that. What do you think? What is a great angel investor for you?
Mainly a person who will pick up the phone and reply within hours. I don't have any expectations on angels having, weekly chats in the calendar for hours and delivering certain things. I think genuinely it's about when founders are in a situation where that specific angel truly can be valuable, knowing and can count on that angel picking up the phone. And it's as simple as that.
Yeah. And what about, picking up the phone, I assume also has something to do implied with an operator background and experience that is valuable. Yeah.
Oh, 100%. Yeah. Sorry. I take that for granted. I think this is something that, if you look at the Nordics as a region, that Norway has struggled a bit with, because Norway has yet not seen many of those large tech outcomes like the rest of the Nordics has. And then that means that many angels in Norway actually do not come from like an operator background in a tech company, but rather having made their money on real estate or oil. And that is, of course, a very, very different world. And then we can talk at length about how an angel is then, how you should be, because in my view then is that an angel should just like stay out of the way because they can just destroy more than they can add in value. But I take for granted now when I speak about angels that these are angels who have been selected by the founders because they have unique network or insights in a specific vertical or industry.
Yeah, that makes sense. I think it's interesting being an angel, and what I thought I would contribute with was like strategy advice, all these things. And what I found is mostly that it's the network I have, whether it's to clients or potential investors.
Exactly.
Like wanted to contribute with other things, but those are the things that they actually need. And it makes a lot of sense, I think, because hopefully I invest in companies that can figure out the strategy themselves because they sit with this every day.
Yeah. And I think this is also the good thing about this is that you, as a founder, if you end up raising your first round only from angels, or, I mean, now we at byFounders are in a fortunate position, right, that we have as founder-friendly terms when we invest as an angel would have, then you kind of postpone, if you raise from us or from angels or any other venture fund who might have as founder-friendly terms, then you can postpone the whole situation about being, adding lick prefs, adding anti-dilution rights, even pricing the company, because we can just invest on, safe notes or convertible loans. So I think that is also quite nice for founders, because as soon as you have any of that in, it's impossible to get out, right? And if you then can get the company into being revenue generating and almost at like a profitable state, then you have all the leverage on your side to ensure that you never, ever have to accept a term sheet with nothing but founder-friendly terms. Meaning everyone around the table are in it for the same reason and with the same incentives, which I think is the ultimate goal.
It's since you, I don't want to say rely more on angels, but look more to angels. Do you then also pay very close attention to, like, when you meet companies at a later stage? Do you also, I guess you always looked at the sort of existing cap table naturally, but are there certain angels where you're like, okay, if these people are in, that's like, because I know you get bombarded with deals, right? So it's trying to like, what are those things that can help you sort through the exciting ones? Are there certain angels where that excites you from the get-go, or does that not matter?
Honestly, that does not matter. I think we like to be a little bit more contrarian than just go for where certain people or other investors want to put their money in. With that said, it's super helpful to be able to call up those angels and say, hey, give me your version of these founders when we take reference calls, etc. So that's super helpful, but it's not something we would use for like triaging.
No. And the reason for asking, I guess, was that some of the later stage funds would often look, okay, who are the other funds that were in before us as a bit of a signal, not to say that they will base the decision solely on that. And I just thought that, okay, interesting to see if that is now happening with angels as well. Yeah.
I think it's already emerging as from like a FOMO perspective. In Denmark, any investment that Bjarke has done, everyone's like, okay, have we looked at this? What is it? So I think for sure it helps from the FOMO perspective. And same in Sweden, if it's Mattias Miksche or if it's Fredrik Hjelm or Johannes Schilt, or now Anton Osika. I hope that venture funds are not basing their investment decisions on that.
No, I know, but I guess it's just getting through the noise that it can help to have like some of those names where it's like, okay, if you manage to get these angels on board, you must have something at least, so it's worth taking the call.
One of many FOMO signals, I guess.
Okay, Sara. So that was one prediction. That's awesome. That was very. I find that very, very interesting and very relevant, and it will be interesting to see. One of the questions I have later on is about how the whole venture landscape might change, and I guess we're already dipping sort of our toes into that question a bit.
Yeah. No, absolutely.
Okay, number two.
And I think that is one prediction on the early stages that I have. But if you then also look at the more later stage, and I'm not talking growth, but like Series A, B, I think that's going to become a real bottleneck. Not right now, but in a few months from now and towards the end of 2026, I think we're going to see it very clearly, based on like AI bubble nervousness. I had a call with one of the American tier 1 funds yesterday where he explicitly said that like we're sitting on our hands right now because we don't want to repeat the mistakes we did in 21, 22. Because most of those multi-stage funds with billions of dollars in AUM have really shit performance of their funds from that vintage. And doing it once is okay. Repeating the same mistakes, less okay. So the cautiousness now, when you see, revenue multiples skyrocketing in everything AI, and also you see revenue really increasing quickly in these companies. I'm really predicting 26 to be a year where a lot of Series A, B investors will be cautious, and we're going to see a lot of companies not being able to raise that round, not because they actually don't have good companies, because in comparison to 21, 22, we actually now have real companies with real revenue, real cash hitting the bank account, many of them even being profitable, which was not the case at 21, 22. But I still think that the AI bubble nervousness is going to take overhand here and make it really difficult for companies to raise those rounds.
And I guess also, as you said, yes, they're profitable and they've grown a lot. But the question is then, how sustainable is it?
Exactly. That's the thing. Right? Like, will Anthropic's new release in a week from now kill this company? That's like, top of mind for everyone.
What do you think it will take to raise Series A, Series B if we hit that bottleneck? What will they actually invest in if they are more cautious and they sit more on their hands? What do you need to prove to get an investment? Non-AI?
Yeah, I think honestly, it comes down to trying to have a moat in a world where it's impossible to have a moat. And I think I'm probably going to sound a little bit as like a broken record throughout this conversation when we talk about 26. But I think for many, that will come down to distribution and not to the product. And then...
Can you just elaborate on that? I think that's... Yeah. So you're touching on some points I keep mentioning in the podcast, and because I think distribution is only going to get more important.
Yeah.
Because there's so much noise. Yes. So who has the relationship, the people, yes. The client relationship, personal relationship? So could you just, let's double click on that for a second. What do you mean when you say distribution is important here?
I mean, it as easy as it sounds like, are you the one having 3-year enterprise contracts locked in? Are you, if you're building in for enterprise, or are you the one who have millions of people in your community raving about you and the product? Or are you the one selling to a segment that no one wants to touch because it's so damn unsexy and boring and difficult, like selling to government? Like, those are the things where I think when I say that the moat is in distribution, those are some of the things that I'm referring to then.
What skills do you think will be important if you were to what kind of people do you need to hire? And I mean, some of these things you might have built up over a longer time, but are there any skills or any type of people in the organization that you think have become increasingly important because of this, or will become increasingly important?
Yeah, I think there's a couple of things. First of all, just like being an executor, and this is extremely difficult to nail down what that means, and particularly as an investor, how do you evaluate that during DD, right, of a company? But you can pick up signals. Is this a person who, when you ask something, reverts back within 2 minutes instead of 2 days? Is this a person who mentioned something to you, for example, like, we need to build out this feature, or we need to hire this person, and within a week have hired that person, or within a day have shipped that feature, right? Like, so the word velocity is very used nowadays, but I think that's it. That's what you're looking for in a founder. And that can be a founder who is super technical, super non-technical, but just like having that ability to act with an insane level of velocity and just take action is by far the most important thing. So I think that's it. And then one maybe contradictory thing to what you're seeing right now, because we're seeing a lot of very young founders emerging, because sadly, if you've been an engineer for the last 20 years and you have a special way of working, it might be even more difficult for you to get to that level of velocity that you can today with the AI toolbox that you have at hand, because if you're used to working a certain way, it takes some time to shift. While this 19-year-old, it's like natively in her or him to work with this AI toolbox and hence work at a completely different velocity. But on distribution, I think some seniority actually matters. Like particularly if you're building in anything but prosumer consumer, so selling more to companies, earning the trust of these like buyers and decision makers in companies, super difficult as a 19-year-old to do. So I think that's, I guess, my contrarian thought that yes, we're going to invest in more and more young technical founders, but I put a big premium on people who might be in their 30s to actually build from a distribution point of view.
And you see a lot of companies, obviously, and actually did an interview with another venture fund that's coming out this month, and we talked exactly about young founders. And one of the things we discussed, which I also want to hear your take on, is so technically super exciting and pays. Typically, they can work. They don't have any kids and families to attend to yet. Hopefully at 19. I mean, I don't know. Hopefully, but building a company when you're 19 with, I would say, lack of experience in a lot of things in life, and not to say it can't be done. And then, as you said, like the commercial aspect of it, how, like in the companies you see, how do you deal with that, or like what gets you nervous, and how would you mitigate that sort of nervousness? If you understand what I mean, like you meet this brilliant 19-year-old who can just run extremely fast in developing an AI solution. But there might be concerns about how you're actually going to sell this because it's a B2B enterprise offering. And you will have to scale this company, maybe not as much as you did 2021, but you still need to hire a bunch of employees. As an investor, how do you think about this, and how would you advise such a founder?
Yeah, I think I would divide it up in two things. One thing is hiring, and one thing is kind of commercial success, because as we've now agreed on, I think young founders can build technically extraordinary products. So let's just dismiss that part for a second. So if we look at the commercial side then first, I think you can hire your way to that, but I think you need to heavily incentivize them. So like the ESOP is going to be more crucial than ever. And then on the kind of hiring company building side, there you just need to ensure that these founders are coupled up with experienced people from the get-go. I mean, this is something that we do a lot because we have this byFounders collective of all these like unicorn founders who built the companies 10, 20 years ago, who's seen everything you can see. And having just one of them coupled up with the young founders we invest in from the get-go is a game changer. What we need to ensure, though, as an advisor, like not operationally, what we need to be careful with here, though, is that the playbooks that worked before are not working anymore. And I think I'm seeing firsthand in companies in our portfolio where young founders have successfully been able to grow their companies very, very well in their own way. And yes, it might have been a bit chaotic, but things have worked and the velocity has been insane. And as soon as they start hiring out that senior bench of folks, politics starts, velocity decreases. You have middle managers doing nothing. It's just like things that worked in companies 10 years ago, it does not work in companies today. Like the pace at which we are working at right now and that AI is developing in is just too fast for those playbooks. So I also think we need to be open-minded to say, that there are new ways of building companies, and from the outside it might look weird and crazy, but it might be the best.
Sarah, you worked at McKinsey, so you've been in professional services, and now you are very much on the tech side of things, so to say, or looking at tech companies pretty much every day. I didn't write this question down, but I'll give it a go anyway. Tech-enabled services. Do you have any view on that? Because I mean, back to the point of like having the personal relationships, but all of a sudden being able to provide, whether it's management consulting, legal, recruiting, whatever it could be, much more efficiently. Where do you think that's going?
Clearly, it's an upswing right now. And I think it's great that it's getting attention, because I think a lot of people have been naive for a long time, saying that we can just productize everything. But when you look at it, like, what are SMBs paying for when they pay for a lawyer or an accountant? Of course, yes, one thing might be the actual document or the actual accounting service, but the majority of what you're paying for is you just like give accountability to someone else and liability to someone else. So no matter how good of a tool you would provide them with, I genuinely don't think they would replace their accountant or lawyer or anyone else around them, because you need to outsource that decision making and that liability. I mean, just looking at my days in McKinsey, I mean, I know this sounds terrible, but I genuinely don't think we came up with any ideas or solutions that the employees did not already have. But many of those decisions are really political, difficult decisions. So us coming in, having done the analysis and taking out, like, being the blame goat, right? Like, the McKinsey guys told us we have to close down this department or let go of these people or whatever it might be. That's what you're actually paying for. And it's really difficult for a product to replace that. So yes, I believe in this. But then the question is, do I believe the winners are going to be new companies that are venture backed? I mean, General Catalyst is one of the funds, of course, that's really good at investing in this space. Or do I believe that the players that we already have, the consultants, the lawyers, the accountants, will ensure that their AI capabilities are so good through software solutions that they will be able to attend to their customer base and hence be a tech-enabled service provider. And I think as of now, I'm leaning a little bit more towards the second piece, particularly for accounting and legal. Again, back to where do I think the moat lays? I think the moat lays in distribution. Yes. So they sit on a huge market share, many times like 99% of the market. And I think it's going to be easier for them to purchase and start using the AI tooling towards their existing customer base than it's going to be for a newcomer to eat up the majority of their customer base with their tooling.
I agree. Of course, there will be some new players that will eat into this market, but I think the time it takes to build up the distribution and the network and the relationships in that will buy the existing companies enough time to get up to speed on this. So yeah, I think the distribution is just going to be critical here. Unless, of course, you can go in and hire. In professional services, also a lot about the people, right? So if you go in and the new companies manage to hire some of the people wwho have the distribution, then that's a whole nother question.
Yes, but even with that, it comes down to having earned the respect and the loyalty over years and years and years.
I think that was the second prediction, Sarah.
Yeah, we don't come far, do we?
No, but I think the predictions are very interesting, so I would rather go deeper on them. Do you have a third one?
I think the last prediction is more, I want to focus more on the startups. And I think that comes down to AI native, like Nordic startups globalizing just much earlier than ever before. I think normally we see at around Series B, that's normally when you start really thinking global. And when I say think global, it's like a European company starting to make a move on the US. And at Series A, normally it's a time when you're proving yourself outside of your home geo. So going from the Nordics out to Germany, UK, etc. Again, if we just go back to summary as an example here, this is a company, started selling 7 weeks ago and now entering 3 new European countries. So this is something we've never seen before. And I think this means that everyone knows it's a land grab, and execution is what matters. And hence thinking global from the get-go is what's going to make or break it. And Nordic founders are already great at this because everyone knows that their home market is way too small to ever build a solid business in. And I think that's been working for us always. German founders, British founders, French founders can actually build pretty solid businesses in their home markets. So they could come to the tens and maybe even hundreds of millions in revenue, depending on which vertical you're building in their home market. That is impossible in Sweden or Norway or Denmark or Finland. So that global mindset is what Nordic founders have, and we're just seeing it getting earlier than ever before.
I hope you're right. And hopefully some more from other countries than Sweden as well. Not that we don't want more from Sweden as well, but it would just be awesome to see Denmark, Norway, Finland step up as well.
I agree. And I can tell you, just seeing firsthand now how, for example, our portfolio company Verda are just on a journey that is almost unheard of. Finnish founder, Finnish company, but going like doubling ARR from a baseline of $30 million to over $60 million in 6 weeks. Like these are the things we normally don't see. And then like one of our Norwegian founders, he happens to be based in Stockholm though, Tor Espen building Sky, also just going from like 0 to 9 million in contracted revenue in a couple of months. So we're seeing signs of having other Nordic founders doing very well, and not just Swedish ones, but clearly Sweden is still the big brother here.
Yeah, and it probably will be for a while. But I noticed in your report that the new Nordics, I'm going to ask you about in a bit. I noticed that Denmark at least is really stepping up, which is cool to see.
Yes.
Sara, awesome with the predictions. Super exciting. And as you could hear, I found them very interesting and very relevant. I wouldn't have told you if I didn't. Then I would have been weird. The funding landscape, Sara, I'm curious. We spoke a little bit about more angels, maybe being even more involved and take a larger part of the sort of the early rounds. How do you think the funding landscape in the Nordics will change? I mean, some have been talking about that some of the, you could say, more generalist funds might vanish, and tougher demands from LPs in terms of high conviction and specialization. Are you seeing this as well, or is that just talks on Reddit, so to say?
Yeah, I'm seeing the complete opposite.
Okay.
And now, of course, I am biased because we are, like, byFounders is a generalist fund. But what I'm seeing again and again and again, speaking to our LPs, and other LPs in the ecosystem, is like everyone's like, thank God that you've been sophisticated in keeping your fund size, and thank God that you have continued to be a generalist fund, because specialist funds are really difficult to last over cycles.
Yeah, I was about to say some of these specializations end up being very short term.
I mean,
Web 3.0 and
just Web3. Look at all the Web3 funds and look at the performance of those, right? Then came climate. if you look at the earmarked capital to climate, and then you look at who has led the rounds in the best climate companies that we have, it's still Index, Axel, and Sequoia and Andreessen, right? So what is true, and I think will always be true, is that the best generalist funds out there will hunt down and win the best investments, no matter which vertical they're in. And I don't ever think that a specialized fund in that vertical will win over them. And that's what you need to believe if you think performance will be higher in a specialist fund. So of course, I'm not saying that specialized funds are not needed, because I think it's incredible when you, for example, can like pair up, and a specialist fund with a generalist fund can deliver very different type of value to founders. So I see a lot of value in it. But if you purely look into what funds have the best consistent top decile performance, vintage of the vintage of the vintage, it's generalist funds. And I think if you want to build a generational fund that's going to be here for like 20, 30, 40, 50, 100 years, then you either need to have a vertical that you're specialized on that is very broad and you need a global mandate from the get-go, or you need to be a generalist fund. So that's my view of disagreeing.
Love that take. And if we focus a bit on the Nordics, do you think there will be? Do you think we'll see funds shutting down, whether generalist funds or specialist fund in 2026?
Yeah. I think the middle will start to hollow out clearly, and I think we're already starting to see that, right? Like a lot of funds taking a very long time to close their funds, raising much smaller funds than their initial targets. And this is because the 21-22 vintage, where almost everyone could raise a venture fund, really struggle to raise their next fund now. Because LPs are just much more harsh, actually looking at real DPI, actually looking at top decile TVPI, and looking for repeatability in this model. It's venture is about the power law, and just as it is about the power law in the world of startups, it's the same in venture. So I think we're going to see a lot of funds discontinue.
Maybe for the best. Yeah.
I think so. But then we're going to see new alternatives emerging. And if that is a lot of angel funds and solo GPs, going back to what we just talked about earlier, as long as it continues to be the same amount of money and preferably more going into venture, then I'm happy. And as long as it's not concentrated in just like one or two, turning this into a monopoly, because we know that's not good for founders. We need to ensure that it continues to be good competition, so founders have the leverage on their side when it comes to terms, etc.
Yeah, again, back to the point earlier, but I'm seeing a lot more angel syndicates as well.
Yes.
And to the point about specialization versus generalist, I guess you can also get a lot of the specialization through your angels.
Exactly. And I mean, I believe all funds are also doing this. And we at byFounders have this byFounders collective with all these experienced founders and operators who have invested into our fund and signed a pledge to support our portfolio companies. And we continuously update that collective to ensure that we have the right profiles in each vertical, right? So during Web3, we added a couple of really strong Web3 profiles. During climate, we added a couple of really strong climate profiles. And then in the early days of AI, we got some of the most prominent AI profiles into our collective. So I think if venture funds are not surrounding themselves with people who are specialized, who can truly help portfolio companies in certain fields, areas, verticals, then we shouldn't exist.
Makes sense. Okay, here's one thing. This is the next question. Sounds like I don't like the other questions, but this one I was particularly happy about because I find it very interesting. And that's about building personal brands and also building brands as a VC firm, and how it seems to be changing or has been changing for some time. I mean, if you go back, I don't know, 10 years maybe, a lot of the firms would just have a website where it said the address. And you couldn't see anything more than that. Some still do. But then you started seeing things have slowly changed, of course. And just in my view, it's accelerated in the last 1 to 2 years about building brands. Both, I think Anton from Lovable was a great example. I saw someone show like all the followers some of the top people have in Lovable, which is insane. But also for venture funds. I mean, Andreessen Horowitz doing a lot more on this. How do you see this? Do you think it's become much more important with brand and visibility, both for founders, but also for venture firms?
Yeah, I think my short answer is yes. I think it's more important than before for both categories. But I really want to differentiate here between the founders and the VCs, because I think on the founder side, it's if you're building a company where building in public is your kind of methodology and where it's more prosumer oriented initially, then it's insanely important. And it's not about something superficial about being cool and having a good brand. It's like actually ensuring that you can have a moat in distribution. Again, broken record, Sara here. Hiring the best people, just like getting the investor interest, like all of those things, extremely important. So if you as a founder, as Anton Osika and a few others have been able to accomplish, have an extraordinary following, that is probably one of the strongest moats you can find. And no matter if other companies will have the equally good products, which I don't think they have yet, but assuming that would happen, just like it's really difficult to beat Lovable. And it very much comes down to Anton and his reach. So 100% yes. Do I think that is needed also if you're building AI for government services? No, I think it's then very differently you need to build trust and be in the right locations and then maybe not run around X sharing things that much. But yes, in the world of VC, I'm seeing just a split emerging. I'm seeing like an allergic reaction to this whole branding thing, that unless you have a big podcast, and I mean, all kudos to Harry Stebbings, and he's doing an incredible job with 20 VC. And we just co-invested during the fall with them, where that distribution network and that brand is gonna be super important for that company that we invested in together. So all kudos to that. But it's one out of many things that is important as a venture fund. And I don't think it's something you can just go and copy. I don't think all venture funds should now have podcasts and try to be like famous on X or LinkedIn. So I consider it less important for VCs. Some of the best performing VCs still are completely acting under the radar, right? With zero branding and zero visibility. And I think that's going to continue.
Interesting. I know we're about to be on time here, so I won't go too deep into this, but I had a discussion with another VC about this, and they were debating exactly this, whether to do it or not to do it. And my question was, if you have some of these younger founders who maybe don't have a lot of experience with who are the great VCs and all this, whether you also need to be in their feed somehow. Do you know what I mean? Or maybe they will find out very quickly who the right VCs are, who can help them the most.
Yeah, I think one thing I truly believe in is that the quality of network always triumphs the quantity of people in your network. And I just know that there's tons of things that I'm not the best at when it comes to being an investor. And I'm very upfront with many of those things to founders that I invest in. One of the things that they tend to appreciate with me is that I'm quite good at pulling strings when needed in my network. Because my conversion rate from asking an individual about something to them actually supporting is quite high. And I think I would rather have it that way than having a really broad network. And then when I reach out, it just becomes transactional and very little value is actually delivered back. So yeah, that's...
That makes sense. Sarah, I'm going to jump to the last question here. I have to skip some questions. It's a shame, but they have to go. This one I wanna do. You've been a founder. Then you started dance school. I thought that was pretty cool.
Very non-technical.
Yeah, but still very cool. Show the entrepreneurial skills. If you were to go step back into the role as sort of an operator or founder, knowing what you know about sort of the tech landscape in 2026 and where you think are going, what would you build?
I think generally now you're asking me this question in a moment of time where I just last week was experiencing really shitty healthcare. My 1.5-year-old son got really, really sick and hospitalized, and hence I saw firsthand the enormous inefficiencies in the hospital. So I never thought that I would say this, but I think in the world of AI now, and with what I just experienced, I think I personally would try to do something as unsexy and as difficult as trying to kind of build an AI native EHR system of some sort, because I'm seeing the application layer being just bombarded. But in the end, if the EHR system is like from the 70s, then nothing else, like no efficiency will be reached. So that is my honest answer right now.
That's a good I can't really judge whether it's good or bad answer, but it resonates a lot with me. And it's the whole health tech space is it's so exciting. But I wonder what it will take to really unlock the full potential, because there's so much sort of governance and red tape, but that's a whole other discussion. Sara, thank you so much. I could have kept chatting to you for a very long time, but we're on time now. Thank you so much.
Thank you for the time, Espen.